Hi, my name is Christine Ongode. I am going to present our group. Unfortunately, my other members are unavailable, so I'll present everything on my own. Our group is called the Wannabes Inc Consultancy, and our motto is making a difference. I'll move straight to the members. We have Christine Ongode as the team leader, Karen Jepchirchir, assistant team leader, Nahashon Julu, the member, Eunice Kokoyo, a member, and Kevin Fentas, who is also another member. In our vision, we shape the future by preserving our heritage, discovering new knowledge, and sharing our resources with the world. Then our mission states that profitable growth through superior customer service, quality, and innovation. In our introduction, we came up with various importances of financial accounting, and we as a team discovered how accounting has become very important in the areas of businesses, and this is what we came up with. Accounting communicates information that the users need in evaluating the financial performance of the company. It also supplies relevant, accurate, and timely information that is used in decision making. It can also assess the financial history and current performance of the firm. In our problem statement, we actually deal with the kitchenware in the project as a company, and so due to high demand of kitchenware, that is as a result of poor quality, the kitchenware produced by our prospective competitors in the UK, Wannabes Inc, we aim to take advantage to open our new outlets. Based on our tradition of value and customer satisfaction, we are also committed to make sure that our esteemed customer base gets the value for their money by meeting their needs. Our primary target market is the high-end consumers, who are mainly homeowners and restaurants. The main reason why this market was targeted is because of the ease handling such clients in comparison to individual clients. Then we have our balance sheet, where we mainly deal with the assets and the liabilities. Under assets, we have the accounts receivable, which is 2 million, prepaid insurance of 2,600,000, and inventories, which is 1 million. And our total current assets come up to 5,600,000. Then from there we have liabilities, and under there we have accounts payable of 2,100,000, warranty liability of 1,400,000, and under long-term liabilities we have notes payable, which is 2,100,000. Then non-current assets, we have property, land and equipment, which is an amount of 4 million, and our total assets is 9,600,000. Then our total liabilities will come up to 5,600,000. Then the stockholders' equity, and then we have common stock of 2,750,000, retained earnings of 1,250,000, and so we come to totals of 9,600,000. We'll then move to our income statement, where we have a revenue of 10 million, and so in less returns and allowances we have 250,000, and cost of goods sold we have 1,250,000. When we take this total, then we subtract it from the 10 million, then we have a balance of 9,750,000. Sorry. Then gross profit. Under gross profit we have warranty and sales, rent expenses, total operating expenses, which is a total amount of, so the total expenses of rent expenses and warranty sales, the total come up to 1,440,000. Then under operating income before taxes we have the revenues and financial expenses, then income before tax and sale of land. Our net income profit, we have a total of 5,150,000. Our next slide we talk about the trial balance, where we have the account titles, the debit and the credit, which are the account balances. So we have cash, supplies, equipment, sales, notes payable, purchases, wages expenses, office salary expenses, dividends. And so our total balance is 9,842,000, both on the debit and credit side. Here we have calculations of the ratios, and so we came up with different types of ratios and the formulas of their calculation. Like now the current ratio, we take current assets divided by current liabilities. And the quick ratio is calculated by taking current assets minus stock, then you divide by current liabilities. The gross profit margin ratio, you take gross profit divided by revenue times 100%. As well as the net profit margin ratio, you take net profit divided by revenue times 100%. Then for fixed assets to total equity ratio, you calculate by taking fixed assets divided by total equity. Then here we have our financial reports and ratio analysis, where we have given a brief description of each. Under financial reports, we have given the definition of financial account, which is a special branch of accounting that keeps track of a company's financial transactions. It contains financial statements like the balance sheet, income statement, and the cash flow statement, and others that were not mentioned. Then under ratio analysis, we've given a description of it's a quantitative analysis of information contained in a company's financial statements. It is used to evaluate a company's operating and financial performance, and they include the uses of the ratio analysis include management of company for turnover and operation performance ratios, shareholders to calculate their profitability, and the credit rating agencies for solvency. Then here we have the accounting software, where we have given a brief statement about it, that it is a type of application software that records and processes accounting transactions within functional modules like the trial balance, accounts receivable, and accounts payable. Those are the types of account software that can also be given by their functions, where we have functions of accounting software, and we have stated that basing on accounts payable, it enables funds to be paid to suppliers of energy, and the expenses of the company must pay out. Basing on accounts receivable, it enables billing of customers automatically and is done by sending out invoices. It also helps stock taking and inventories by recording and updating a list of stock to produce a list of items currently held in stock. In our next slide, we have the references, where we've given sites to all our information based on the company. And I think that is all for now. I'm very grateful for joining with me, and thanks.